morning and welcome to VSA Capital 5 Minute Morning Miner on Wednesday, the 23rd of July. And a few things to talk about this morning, Paul. So we'll just crack on and not have any waffle. Let's start, though. Obviously, we've been talking a lot about Mexico because I'm going out there at the end of August, but with the gold and silver price going so well. Two of the companies I'm going to visit out there have reported late last night over on the TSX. Pretty good production numbers, etc., haven't they? So let's start with Guanajuato Silver.
Yes, that's right. Quarterly production results there for Q2 2025 in comparison to a year ago level. Silver equivalent production up 5%. And the main point I would pull out here is that gold production was up by 17%. And that based largely because of the mill throughput rate was raised by fully one third. Now, they did have a fall in the silver output, which was a recovery, which was down by 2%. And the feed grade of the silver had fallen as well. But this improvement in production rate through the mill means that they will show, I'm pretty sure, better um, financial numbers when they put the Q2 results out. And of course, also, we've got a much better metals prices too in comparison on year levels to work with as well. So looking very good at this point.
Actually, just to correct, that was Avino gold and silver, wasn't it, Paul?
Yes, it was. Uh huh.
Yeah, sorry, I introduced it as Guanajuato silver, but Guanajuato actually has had drilling results. So Paul just talked there about Avino. Now,
That's a
Paul, talk
Vino.
about the
Yeah.
drilling results from Guanajuato, please.
Yes, that's right. Guanajuato Silver did put out yesterday information on higher gold grades that they've hit in drilling at their San Ignacio mine underground. Several of those results showing several grams of gold in the intercept levels, and they are close to existing infrastructure. They're now working in the west part of the mine, but they will move to put development into these newer, higher grades yet for production in 2025 because they can feed that to their Cata mill, which is just 10 kilometers away, and the higher gold grade will thereby increase the mill margins for the production this year.
Let's just hope I don't get confused when I'm visiting four Mexican gold and silver mines when I'm out there at the end of August. If we get confused with just two, but it's all good stuff. Now let's also, whilst on the TSX, Paul, our client Midnight Sun, they started drilling again over in Zambia for their copper, haven't they?
Yes, that's right. Midnight Sun. They have resumed a drilling program on their Kashiba Main project there in Zambia. Kashiba Main being a near surface oxide high grade copper mineralization. 164 hole program planned here. It's a drill out to 50-meter centers of Kashiba Main in order to put it into a compliant resource estimate by the end of this year. Now, key point is this Kashiba Main deposit so close by, just 6 kilometers to First Quantum's operation on oxide copper, also there in Zambia. So it's going. I'm sure First Quantum is looking at this one very closely.
And First Quantum obviously have the mill, but they're running out of resource, aren't they? So I think they're probably looking at it more than closely. I think it's almost inevitable, isn't it?
I would think so because the size of Kashiba Main would add several years, I would think, to the mine life there at their mill. So it's going to be easy pounds for them to acquire, I would say.
Yeah. Now we've also had quite a nice fundraise from Guardian Metal Resources, which is the Nevada tungsten project that is really starting to move forward very rapidly, isn't it? It's on AIM, Guardian Metal Resources. Paul, talk through that.
Yes, that's right. The Guardian Metal. I actually have two primary properties in Nevada on tungsten. The Pilot Mountain project, which is the one that's been explored more recently over a longer period of time, but that's in western Nevada, and then the Tempayut tungsten deposit would be down in southeastern Nevada. This fundraise came in 15.6 million sterling, or about 21 million US. And I just have to point out that from exploration standpoint, that's the most money raised in a single raise by an early stage tungsten explorer that I can think of in a very, very long time. So just demonstrates how much buoyancy there is under these current sanction and tariff conditions around tungsten at this point.
Well, not too long away. Don't forget, we raised 40 million for Tungsten West. It was only about 4 years ago.
That's a
Unfortunately,
little while.
yeah, it was only 4 years ago or so. Look, I think obviously the other thing is Guardian Metal Resources. I think probably are going to end up getting listed over in the States. Almonte is just is listed on Nasdaq, raised a load of money. Sort of where you need to be, I think, if you want to raise really serious money. The Americans, when you're listed out there, are taking a lot of interest. Let's also just finish because this Gem Diamonds have had a profits warning this morning. You can talk through the profits warning, Paul, but I think what is interesting is that a huge amount of diamonds are now coming from China and are being made basically in the lab. And what they managed to do is effectively make a natural diamond in the lab by doing the process that would normally take about 1 billion years or something, but doing it in about 7 weeks or something. I don't know if you've been looking at that, Paul, but talk through the profits warning from Gem first.
Yes, Gem Diamonds here, they have put out their first half trading statement, and it's a reflection of austerity around the operating story here. They've had to impose redundancy on 250 workers there at the Lesotho mine as a result of just the continuing poor diamond market prices at this point. But they also had a fall both in their grade, mill grade, as well as their recovered grade and the value of the rough that they otherwise had been selling in this period as well. So it's not a good picture there for Jim, and they are doing what they can in order to shrink the financial risk of the business at this point. They still have recovered 6 diamonds over the period valued at more than $1 million each. Of which 4 of those were greater than 100 carats in size, which is common for this particular mine in Lesotho. But the main thing is that the market is just so slow at this point that really struggling at this point. They have deferred waste stripping, which is the main thing that has caused the redundancy of workers. But they do intend to put out or mill the same amount by volume in the coming half.
Well, I mean, as I say, because of what's happening in China, I suspect the price of diamonds is actually not going to get better and could get weaker. And therefore it doesn't look good for any of the diamond companies in particular. I mean, it's interesting how technology is doing that in certain metals. We've just seen recently with fusion, they're talking about turning mercury into gold. I suspect the economics on that just wouldn't work, and it wouldn't be a viable gold from an economic point of view. But we also know that we have things like fly ash being turned into vanadium, and we are going to see more and more of this. There's a lot of talk about how recently I saw somebody who's using a vermiculite membrane that can take the lithium out of seawater at a very economic rate. And technology could obviously in certain areas change certain commodities and make them uneconomic anymore. Certainly the ones we tend to look at, I don't think there's any risk of that. But you do have to just bear that in mind when looking at commodity values.
You have, you
Got any
have to
comment
be
on that,
careful.
Paul?
Yeah, I want to say too that in the things of making certain commodities ultra cheap and synthetic diamonds is one of those examples. Is that it essentially creates the opportunity, which is counterproductive to sustainability in several points. Synthetic diamonds, for instance, very much energy intensive in order to produce, and they put a lot of artisanal miners across the world in uneconomic and poorer circumstances. In the case of a very low cost lithium, it just makes it that much greater incentive not to have a circular economy where you would recycle this material but just plain throw it away. And we don't want any more waste created by 10 billion people by 2050.
Well, there you have it. All right, that'll do for today. Sorry it's slightly long. Back tomorrow.
Thanks.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.